Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Wednesday, second day of November, 2016, and this is the Daily Report for Gold and Silver. For the fourth consecutive day in a row, we have sharply higher pricing in the precious metals markets. Gold trading up about $10 on the day, $12.9860. That is, of course, when we look at December COMEX futures. It has had a low today of $12.88 and change and a high of $13.09. Both of those numbers very strategic, and we'll talk about that as we pull up our first chart. Net change on the day, about 0.8%. When we look at COMEX silver, that is up about 0.5%, not performing as well as gold, but nonetheless a nice move up today, up about 10 cents at 18.51. The high today 18.75 and the low 18.36 on the day. Quickly, we will look at Forex gold at 12.9752, as well as spot or Forex silver, which is at 18.49.5. Of course, we do have an active trade going. We are long this market in terms of gold prices at 12.59, call it 12.60. We did move our stops up again today after moving them up yesterday. On today's video report, I want to go through the rationale and why we placed our stops specifically at that price point, and also that extremely interesting high at 13.09 and how that fits in with our current studies. Let's take a look at our first chart. So traders, the first chart that I do want to look at on today's show, it's a weekly chart. It's kind of to start with really that big picture and what the big picture is showing us. And we know for a fact that ever since this market sold off and really began to trade and find a bottom roughly at 12.50 is when we considered entering our long position. Of course, we are long currently at 12.5960. Market's currently at 12.9850. For the last 3 weeks, you can see that on this weekly chart, we have had this market move up quite nicely. And of all the weeks, this week has got the greatest range between the open and the close. Stellar movement in the precious metals market, specifically gold. But we have to say that with a caveat, because there are some potential road signs ahead that I believe we really need to take a look at. And to do that, we'll need to pull up another chart. And so traders, I've pulled up our daily chart. This daily chart is the one that we have been using over the last couple of weeks. We have some critical fib retracement areas that I believe have provided us with an exceptional roadmap, as well as giving us the information we need to make our decisions. Now, if you recall, as this market moved up, I said at some point we will probably run into some sort of resistance. We also talked about the fact that we've seen this acceleration after it broke through, I'll call it the muck right here, because it was trading in a defined and narrow range at about, 65 on the top and maybe 50 on the bottom. And then we had this defined breakout. Of course, we entered this trade back in October 13th. And so there were certain areas that we really wanted to see the market move through and past. 23% retracement, of course, that's a key level. That comes in at 12.73, and I believe that's where our stop was at yesterday. As this market moved up, I talked about the fact that there's two real areas we want to look at. And the first area is 12.92. That is a 38% retracement. And again, this retracement is a fairly short-term retracement from these lows at 1200 to these highs at 1374. That being said, I talked about the fact that the real resistance should come in at a couple of different levels. 61% retracement, that is 1323, and a 50% retracement. 50% retracement is 1308. And I also said on yesterday's show that although 50% will tend to be a minor level of resistance, based on the data that we have, this really could be a major level of resistance. And it's simply based upon the fact that once this market came up and hit these tops, this is a double top here, we had a number of occasions, 1, 2, 3, 4 different occasions in which the market tracked down to this price point, down to this price point, down to this price point, and actually found some critical support in this area, roughly just above $1,300. It was also noted yesterday that when this market broke below this particular price point, it did it with a vengeance. And at the point we broke through, this is where we got that 5-day descent back to 1250 right in here. So what I find most interesting, and it's almost to me like the pieces of a puzzle fitting together quite eloquently, and that is this. Take a look at the high on today's move. The high, 1309.30. Our line that we believe we could find resistance, 1308. That is the primary reason, because of the way that it hit this particular mark and then started to sell off. And you can really see that if we convert it to a 240-minute. In fact, we'll do that in a second. But just to finish up my point, the fact that it came to this price point at 1308 and then began to sell off. And you can't see that on a daily chart because you just get a high and a close, which is well off the high, but you don't know whether that occurred in the morning, afternoon, or late in the session, the actual high of the day. But it made me realize that there's a heavy potential, whether it's just due to profit taking, that we might in fact see a little bit of weakness come into the market on a technical basis at this particular price point. Now, I could have moved the stop. The next level that I was looking at, of course, was 1292. But traders, that made absolutely no sense, because to put a stop above the intraday low of today's market move, typically I like to work with the low of the past 2 or 3 days, but to put it above the low of today's intraday move made absolutely no sense, and therefore we put it below 88. And that is precisely the low of the day. That's what we're doing. We're putting our stop below the low. So even if this market does come down and knock us out, we're in at 59, we're out at 87 or so, we've got a really decent trade. We've got good profits locked in. If it continues to run, we'll be part and parcel and be able to obtain more profits because of that. Let me go ahead and convert this chart. And so traders, have done just that. We've converted this to a 240-minute chart, meaning each candlestick represents 4 hours in trading. You can see the ascent on a 4-hour basis, this double top that it hits, and the way that it sold off was all as we went into the close. Look at how close it closed to the actual lows of the day. And that was the primary reason that we went ahead and raised our stop, and more importantly, that's the reason we moved the stop below the low of today, which is 1288. Obviously, maintain your current long position, maintain your current stop. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.